Hey, everybody. Welcome to the latest No Shill Zone. Ben Cowen and I are here to guide you guys with alpha from facts and data and charts, not the ridiculous stuff you're reading on crypto Twitter or wherever else you might be reading it. But we're here to do our best to give you guys the facts, which I think everyone at this point, Ben, has learned to appreciate. If they're watching this, they understand the value that we're bringing to them. So.
For sure. And hey, it's a pleasure to be here with you again, Gareth. Excited to jump into the charts here. So what do you think we should start this week?
Oh my God, I think everyone's wanting to, what's going on with Bitcoin dominance? What about Ripple? What's going on here?
Yeah, it's interesting because I believe last week, in fact, we spoke a little bit about the dominance, and we talked about how it could pull back to that 50% level. It seems like we've gotten that. I guess the question I'd like to ask you about something here with the dominance is, last cycle, I know from a short-term TA perspective, you were calling for the dominance to go back to that 50% level, from this sort of flag here. We also saw the same thing occur back over here, right? It went to 52% and then back tested that 50% level before ultimately going to 60%, by September. Right. I'm curious though, do you think there's a case to be made that it could back test sort of the breakout point? So we know it was like 49%, right? Is actually where the breakout occurred from. Do you think it could go back to that level before continuing up, or do you think that this was a sufficient pullback before the next leg higher?
No, I do think there's a chance, right? So just looking at that, and this is that trend line here, which is around 40, just under 49%, 48.5 is where I have my trend line. So there's definitely a possibility of that. And again, there's precedent to be set from other charts. The only thing that kind of gives you a range here, which is this 50% to 48.5%, is that if you look at the recent pullbacks, like for instance, here, right, you had a sideways consolidation and you never got back to that level, right? So, and in other situations, if you go back on charts, you kind of have the same situation. I'm looking back here. So here, right? So you had this pivot high breakout right here. You kind of kissed it there, but you didn't quite hit it. And then you consolidated before the next big move up in dominance. Here, though, you could argue, I mean, again, does this, I don't know, it's tricky. It's one of those things where as a technician, I know that it could do either one. And so if you're someone that's interested in buying Bitcoin, you want to start to inch in at this level, and then you always leave room to add if it goes lower, if the dominance comes lower into that level. But I think the one thing I will say is that I would be very surprised if dominance broke back below the previous consolidation. That would be very unusual from a chart perspective, as well as from a Bitcoin historic perspective.
Well, one thing too, a couple things is we've seen the dominance bounce off of the 100-day moving average, and that's actually now above that sort of that range high, at least that I have drawn, around 48.9%. What's interesting that I find here is, and again, I remind people of this as well, is that you can have the dominance of Bitcoin go up even if Bitcoin USD does not go up. And actually, in 2018, this pullback right here sort of marked the transition from a Bitcoin USD rally towards sort of like a sideways move with a slightly bearish bias on it. And it was actually during that move, the dominance went from 50 to 60%, where Bitcoin basically, I think, if memory serves me correctly, Bitcoin pulled back from 8K to 6K. But during that time, the altcoin market dropped very, very quickly. So I think that is something we have to remind ourselves of. Sometimes dominance goes up not because Bitcoin's rallying, but because it's actually going back down.
Yeah, that's kind of where I am right now, is that, just briefly overviewing the Ripple scenario is that, okay, so Ripple essentially won. I think there's some caveats there that people were glossing over, that it wasn't a full win. There was still some situations where the judge said, well, that would be a security if you're selling directly to institutions and so forth. But the key is that and I've said this from the very start of this decision, is the SEC is not going to just lay down and die, right? They're not going to be like, oh, well, we lost, too bad. They're going to appeal, and that appeal process is probably going to take 1 to 2 years. And so you have a scenario now where, as much as we wanted this finality where it's like, okay, alts are not securities, we're now going to have to wait 1 to 2 years to get that finality, which means that institutions are not going to be like heavily investing in these things, right? So it brings us back to that idea that, okay, well, they probably, if we get a spot ETF, they probably would start to heavily invest in Bitcoin, which goes with the whole dominance side of things as well. So I think that's just something that investors, they get so excited, and I don't blame them. I mean, that move on Ripple was incredible. Although, to be honest, I thought it would go more, maybe because it wasn't a full win and there's the appeal process. But for me, it's still this kind of pseudo gray now with maybe a little bit more clarity, but not enough to really release the Kraken, as they say,
Yeah, well, I think the thing, first of all, I will say that the news is likely long-term bullish for crypto,
Right.
like long-term. But I think what we always have to remind ourselves is that they are still very illiquid investments. They are still high risk. It doesn't mean that they can't struggle for a while longer, especially as the Fed continues the tightening cycle. We've seen similar moves by XRP, actually. I mean, when XRP moves, I'll give to give XRP credit, it likes to not do anything for a long time, and then when it moves quickly.
Yeah.
I mean, there was actually a rally over here in 2018 where it went up like 100% in a week, and here in 2017 where it went up 200% in a week, and 2021 like 100% in a week. And these moves are few and far between for XRP. When it moves, it moves quite quickly. But what's interesting is how, I mean, XRP hasn't really retraced that move much at all, but a lot of the altcoins kind of already retraced more or less back to where they were, if I'm not mistaken. What are you looking at with the altcoins here?
Yeah, so and this brings up a really good point, right? So I remember a couple weeks ago talking to you about how, even though I believed that Bitcoin dominance was ultimately going to head higher, there was opportunities for kind of a snapback on some of the altcoins. And so for instance, I had members at Verified Investing Crypto. We were long Cardano with this beautiful little wedge, and then as it popped into this area, that's where we started to unload, right? So it's the swing trade ability to kind of just be in and be out and understand the bigger macro picture. But you can see what's happened. I mean, Cardano's come right back in. Now, interestingly enough, what this does for me, at least, is this potentially brings up a opportunity here. And I'm just looking for some chart things here. Like, so for me, this now becomes, let me do it again here. This becomes support right here, right? So you have this trend line and this trend line, which were this was former resistance. When resistance breaks, it now becomes support. And so for me, and this is again strictly on a swing trade basis, I would potentially be interested in unloading or excuse me, buying Cardano again back at around 29 cents, give or take. And the same thing for Matic, right? I mean, these things were quick poppers. Now it's retracing. So now you have some opportunities on the way back down where you can play. But again, I think it's important to just caveat this for everyone watching that we're not at least I'm not talking about long-term holds. These are make 10%, 15%, be out of the type of trading opportunities.
If you look at ADA, the ADA Bitcoin valuation, it might actually give us some insight into how long that short-term trade could last. You can see we actually ADA Bitcoin bounced off of this level back in mid 2019 around that 800 Satoshi level, and it went up to 1200 sats, which is exactly where it just went up to, and it was ultimately rejected by that 20-week moving average. And this little bounce here lasted about a month before it ultimately capitulated to sort of the final lows for the cycle. So I think what you're saying makes a lot of sense. The time frames seem to make sense. Of course, we know things, markets don't move in a straight line. It's very stochastic. And another chart we talked about last week was this this total 3 minus USDT divided by Bitcoin chart. And I mentioned that like this, while it does seem like a macro downtrend, that this has previously provided support for the altcoin market on their Bitcoin pairs. And perhaps Perfect. This is just the same type of bounce as we've seen before. It doesn't mean that it won't eventually resolve to the downside, right? Like I think it probably will, but you're still seeing a very similar type of move as we have in the past.
Beautiful. Yeah, that's a beautiful one right there. I love how you bring these charts up, man. You program them in and all that stuff. Very cool stuff. So in the scheme of things, I think just to summarize for everyone watching, you're in the belief, as I am, that Bitcoin dominance maybe it goes down to 48, 49%, whatever that low was, but at some point it pushes back up, and we're probably still on the trajectory to 57 to 60%, right?
For me, yeah. So I know, and I think a lot of people would assume I'm fairly biased about the matter, which is probably a fair assessment. But I think the thing for me, it's hard for me to believe that it spent 2 years in this sort of like accumulation zone only to have a false breakout.
Yeah.
I think it's much more likely that it just continues higher. I would suggest, like, if I were to come up with like an invalidation level, like I think maybe as a trader, it's worthwhile to say, all right, well, if this happens, then maybe it would be time to reassess. If we start getting like weekly closes, back down here, like well below this breakout zone, and it just keeps pushing back down, then maybe it would be time to look at it in a different manner. But as long as we're above the breakout zone and above all these short-term moving averages, it still seems to me like it's got plenty of momentum. And there's the other way that you can look at the chart as well, right? You can look at it excluding stable coins. And we've talked about that as well. And excluding stable coins, it has seen a fairly sizable pullback, I believe, all the way. I think the highest it was at was like 56.5. But I mean, in the grand scheme of things, this is just probably a higher low. I mean, it's just been one higher low after another since May of 2021. I would suspect that this will just be a higher low.
Sorry about that.
That's fine. But yeah, I mean, that's ultimately my guess, is that we'll see altcoins. They've seen these short-term bounces on their Bitcoin pairs because of this most recent ruling. I mean, look, I think people are going to assign the narrative to it, but you could have argued it was going to happen either way, right? I mean, when the dominance breaks out, it likes to back test at some point. Things don't move down in a straight line. You don't know what the news is going to be that's going to associate itself with the price action, but it nevertheless usually comes.
And I do want to just point out too, is that just with Bitcoin dominance going up, again, just to reiterate, it doesn't necessarily guarantee Bitcoin's going to go up from here, right? So Bitcoin could drop 20%, alts could drop 40%, right? And then dominance still goes up in that situation. So just to be aware, and the only reason I bring this up too is if I just flip to my chart, is that there's been some, even though we're still technically stuck in a sideways consolidation, which is usually bullish for Bitcoin, I'm struggling with some factors here, right? So we keep on making these attempts and making even slightly higher highs, and then something's causing Bitcoin to kind of reverse super quickly. Like this candle right here technically fits a topping tail, and topping tail in technical analysis is a bearish indicator. Here we had this beautiful close. It was like the first close or the highest close we've seen. And the next day, Bitcoin fell right back down, negating that entire move up, which again is not confidence building. It's not a good signal for Bitcoin. And then we've just gone sideways. And you can see, actually, I put in a channel now. There's a pretty clear sideways upsloping channel that's kind of keeping price in this range. So I think just from my perspective is that you have to admit that this sideways chop after a move up is usually bullish, but it's not been an easy success breakout situation for Bitcoin. And I do wonder at some point, if this thing can't break out, path of least resistance is to the downside. And I was curious your shorter term views on this, Ben.
Yeah, so going into this year, my general view is that we'll spend the year between 12 and 35K. The longer we go into this, though, I think the harder it becomes to justify, because I mean, normally in the pre-halving year, right, what normally happens is we spend half the year going up and half the year going down. And the last two times, in fact, we had a pre-halving year of 2011 and 2019. And in both of those cases, like 5 of the first 6 months were green, 2011 and 2019. And those were both pre-halving years. And then 5 of the last 6 months were red in those years. So I think that, and again, normally Bitcoin in the pre-halving year, normally it finds some type of significant top about halfway through, right? Like, again, if you just sort of overlay 2015, you can see there was a top here. Like, just look at it with respect to 2023, right? Like the same top before ultimately a double bottom. In 2019, we saw this top out in June. And in 2011, it topped out in June as well. So June, July tends to be a significant path for Bitcoin to find a local top in the pre-halving year. And, one of the things I keep thinking too, with regard to this, is how, if Bitcoin USD goes down and the dominance goes up, that means the altcoins get wrecked more. Or if Bitcoin rallies, I think it just leaves the altcoin market behind, right? So either way, it just seems like the dominance is going to go higher. If you look at, there's this indicator I really like to look at. It's called the altcoin season index. And this is like a 30-day moving average. Like if I take a 30-day moving average off, it's a little bit noisier, but if you apply moving average to it, you can kind of see that there's been 3 times in history. So we just hit like around that 5 or 6 level. There's been 3 times in history where we've gone to that level, right? So December of 2020, September of 2018, and and October of 2017, November 2017. So 3 times previously. Now, 2 of those times when we came out of Bitcoin season, it was the altcoin market exploded, right? 2 of those times. But here's the thing, like there's one time where we came out of that and then altcoins got wrecked, and that was in 2018. And I look for a confluence in other indicators. So like what's similar today with 2020, 2017, and 2018? Like what does today most closely match, right, between those 3 outcomes? And if you look at things like the social risk, which we talked about, right? 2017, higher lows, right? 2020, higher lows. 2018 was lower lows, right? So the one time where altcoins got wrecked coming out of Bitcoin season, it was when we were putting in lower lows, which is actually what's going on today, right? So I still, yeah, as much as I would love to just join in on the fun, right? And just say, put the moon goggles on and just say, say that they're gonna go up. It's just like I can't get past this. Like, who's the marginal buyer if retail is still capitulating out of the altcoin market? And then that's ultimately what I look at. And then you also look at total 3, the altcoin market, and you look at similarities between today and 2020. I mean, there's not a lot. I mean, in 2020, total 3 was trending up above the 20-week SMA. Today, it's still getting rejected by it. 2017, it was above it. 2018, it was getting rejected by it. So until the market definitively proves the dominance thesis wrong, I still think the altcoins are going to be struggling for a while.
Yeah, no, that I agree with that. I think that, again, just even with clarity purposes, and again, I just keep on thinking about, well, where's the big money, right? And the big money is not going to be. I mean, you got a spot ETF, which is going to draw. Think about it like a magnet. The spot ETF basically has to be approved by the SEC, which is going to give semi-green light to Bitcoin for institutions. They're not getting that green light with altcoins at this point. Doesn't mean it won't happen in a few years, but as of now, it certainly does seem like that's the place to be. So I want to touch base on something that I've been looking at here, which is the US dollar, and get your views on this. So we've seen a pretty impressive breakdown just in the last week on the US dollar. And according to me, according to what I'm seeing, I do see some support coming in here, but everything I'm seeing is pointing to eventually further downside in the US dollar. And I was curious as to your thoughts on where we're headed on the US dollar.
Yeah, I mean, I'll say you nailed the US dollar call. I'm pretty sure you were pretty bearish on it the last couple of weeks we were talking about it, and it's broken down below that 100 level. My views again are somewhat mixed. Like I kind of, and I again, it's not just me like trying to avoid it, but I sort of see the case for both sides. Although I certainly lean to I think I would defer to you in this situation. But there's one part of me that thinks that the U.S. economy is going to be stronger than its counterparts, and therefore can handle tightening longer than its counterparts, and therefore the dollar could do well. But there's this other part of me that's like, well, I mean, if we do just go into a recession, we know that the dollar can sell off into that, and everything can go down with it. So I'm kind of on the fence there. I see the merit for both claims, but here's the other thing, Gareth. We've talked about net liquidity before, and here's sort of something that we have to wrap our head around as well. Is if we think about net liquidity, if we at least assume that net liquidity is denominated in U.S. dollars, right, and we assume that the central banks from around the world, if we convert their balance sheet to U.S. dollars, and the U.S. dollar is bleeding against all these currencies, and that means the net liquidity is going up in terms of U.S. dollars, right? Because you can convert that other currency to U.S. dollars and get more U.S. dollars for it. So I guess the question is well, if the dollar goes down, that means net liquidity goes up, right? Because if you're taking it from beyond just the United States, right? If you're looking at like the ECB and you're looking at China and Japan. Now, again, they're reducing their balance sheets as well, right? We know the ECB, I think they're even accelerating their QT, but denominated in US dollars, their balance sheet goes up if the dollar loses its value against the euro. So I'm kind of curious what you think about that.
Yeah, I definitely think that that's a possibility. I'm looking at more for the potential for the weakness in the US dollar that could drag on for years. And again, there's the difference between short term versus long term. But for me, it's like, you look at the US debt now, 32 trillion. And I think I was reading that 800 billion a year is just going to pay interest, right? And so the question becomes, how does the US get out of this? I was just looking at, there was actually a chart I was just looking at in tax payments, tax revenue for the government is now falling off a cliff to the downside, which means it's even harder, which ultimately leads to, well, how do you pay it if your revenue is going down, your debt is going up, your interest payments are going up? There's not a lot of options. Either you raise taxes, which isn't going to fly with the government the way it is, or you print money, right? So that kind of breeds, and again, this is more of a 1 to 2 year outlook, maybe potentially not like the next 6 months. But I think that's kind of where I am, where, and you're right, if we get in a situation where China does invade Taiwan, the dollar is going to spike on that. It's still the safe haven for the globe. But barring those type of scenarios, you got to think at least that it could head down. It's kind of part of the bull case for me on gold as well.
Right. I mean, I think the hard thing is that at least in the last 10 to 15 years, if the dollar is going down, that usually means risk assets are going up, right? And we've seen risk assets go up. So I guess the question is, at what point does it actually turn back around? I think in 2017, if I remember correctly, Bitcoin found a top before the dollar found a bottom. If I remember, it's been a few years, but I believe that if I pull over here, the dollar, so the dollar in 2017, it looks like it. Yeah, Bitcoin. So Bitcoin actually topped, we know, in late 2017. I believe it was the week of December 17th. So it was over here. The dollar continued down until, almost February, around February, before it actually turned back around. So, I mean, again, like there are examples in history where, where Bitcoin can struggle even if the dollar, or it can top out even if the dollar is still in a downtrend.
Can you go to, by any chance, can you go back to the 70s and 80s and just to look at what that was doing there? Because in the last 20 years, with inflation being sub 2%, I think the weakening dollar was always a positive. The question is that if let's just say we stop declining on inflation at 3% or 2.5, and the Fed is unable to stimulate in the way that they're used to, the way they've done for the last 20 years, how does it behave at that point?
Yeah, so I'm just going to overlay the dollar with the S&P so that we can kind of see what was going on. So you can see, like, in the 70s, like, here's an example, right? So from like June of 76, we can see that they went down together, right? So like the S&P rolled over here and it didn't bottom out until March of 78. It bottomed before the dollar did, though.
Yeah.
But they still sort of both went down in tandem. Here's another example, right, where the dollar was going down in 73, and then you can see the S&P ultimately fell off a cliff as well. It had some spikes, right, but it still wasn't going, back up into the 115s. I think the main different point is back over here in 81, when we had 2 recessions back to back, where we saw the dollar go up to that 115 level, get that rapid pullback to the low 100s, and then explode higher up to 165. I don't think we're going to be recreating those conditions anytime soon.
Yeah.
But I mean, there certainly are examples, right, where the dollar goes down, and so too does the S&P. And you don't even have to go back to the 70s, I don't think, to find that example. You can see, here's a good example, right, where the dollar here topped out in early 2002. And it went down, and the S&P didn't bottom out until October of that year. When you look at it like this, it all seems like it happened so quickly, but you're looking at decades on this chart.
Right.
This is absolutely taking place over decades. If you zoom in, you can see the dollar topped out here at around 120. The S&P topped out, or the S&P was already in a bear market, and the S&P continued in a downtrend even while the dollar was moving lower.
Yeah. And that it's going to be interesting to see. I mean, I'm super intrigued by the next 6 to 12 months in terms of what markets do. I mean, we're now looking at, and just to bring people up to speed on some of the things I've been following, the Chinese reported major economic data yesterday. It was all atrocious. And the thing is, when they report a miss, in general, I always like, so if they report like 5% GDP, I'm always like, okay, it was probably like 3%. They always like to overestimate, right? So the fact is they're reporting misses below expectations. It's probably even worse. And what's fascinating about the China situation is that we actually have a scenario where they came out of their lockdown and you did see a quick push, but it didn't last the same time. Like the US has lasted for so long versus China. It was like, what, 3-6 months max versus a couple of years for the US. So really interesting to kind of keep an eye on that. And I wanted to just show, I'm just going to go to my Hang Seng chart here, because I do think it's important to kind of recognize that, you've been in this period where this chart here, if we zoom out, you can go back all the way, but you topped out on the Hang Seng in 07, and then you double topped in 18. But if we look here, we're so far away from all-time highs in China. And again, you have to wonder, well, what's the kicker here? I mean, China is the fastest growing economy in the world, yet their stock market is in the dumps compared to the US, which if we flip over to the SPX, I mean, look at this longer term monthly chart on the S&P, right?
Right.
Look at the run we've seen. So again, is it their politics? Is it the communist side of things? I mean, I'm sure that all plays into money being wary about their tech crackdown and stuff like that. But again, it's just interesting to see. And then if China starts to weaken, does that signal weakness in the US or globally that we could be seeing? And again, you could look at the European Union. European Union's a mess. I mean, Germany to everywhere else. The US is kind of this one last domino that hasn't fallen. And I don't know if you have any views on the global economy and the domestic, but I'd be curious on that.
Well, it's interesting because Germany just printed 2 consecutive quarters of negative GDP while their stock is while the major index there is putting in new highs.
Yeah.
But I think it's interesting because we sort of see this take place where a lot of different sectors in the world or a lot of different countries are seeing negative GDP at various stages, but the labor market hasn't really moved in the same way that you've historically seen.
Yeah.
I'm still of the opinion that I do think the economy is slowing down, but look, you can't just stop the US economy on a dime. The Fed only has certain tools, as does the ECB, as does the UK. I mean, you could go down the list, like Australia, New Zealand. I mean, they only have certain tools. And if you print all this money during the pandemic, just because you raise interest rates doesn't mean the economy is just going to immediately slow down. So there's a lot of indicators that I look at when it comes to macro stuff that there's 3 different things you look at, right? Like some of them look like we were in a recession long ago. Some of them look like we're heading towards one, and then some make it look like we're nowhere near one. There's actually a really interesting one. So like here's the coincident economic activity index, and there's another one actually as well. If I just quickly pull it up here so I can show both of them. There's also the composite leading indicator, right? So these are 2 interesting indicators. It's just taking a little bit for this to load right now. My internet connection has been a little wacky for the last few days, but if you look at both of them, what you'll see is that they both of them would suggest that the economy is slowing down, but we haven't actually seen it go into that phase yet where it's obviously a recession, right? So like here's the coincident economic activity index. Look at it on a year-over-year percentage change. Like it's going down. It's certainly going down. And if you're not familiar with, for the audience who's not familiar with this index, it's it just is looking at non-farm payroll, average hours worked in manufacturing, the unemployment rate, and real inflation adjusted personal income. And it's looking at the year-over-year change right here is 3.65%. Now we know that if it continues to fall from here, that's where recession territory begins, right? But it's kind of at these levels where, I think there's enough people that think we avoid any type of soft landing or hard landing, right? They're in like the no landing camp, that think that it won't go down. Yeah. But I think the trouble with what I've seen is like, at least in history, you don't get out of these periods of high inflation without inducing a recession at some point. It's just like, when does it occur? Does it occur this year? Does it occur next year? It's hard to say exactly when these things occur, but what we do know from the context of history is that it takes that recession to really bring core inflation back down to earth.
Yeah, that makes a lot of sense. So yeah, I'm in the camp that I think the recession's probably now very end of year or 2024, just based on the strength in the labor market. And again, I think that's going to be the kicker, right? Is when the labor market cracks and you really see consumers starting to pull back on spending. Right now, we saw consumer confidence numbers through the roof. I mean, part of that I think is stock market induced, where when people see their 401ks, they're like, what the heck, man? Look at how good my retirement is looking. I can afford to go spend $1,000 on this or 5,000 on that. Right. But again, keeping an eye on that labor market is probably the key. Now I'm looking at gold, right? So like if we look at gold, we've seen, and this is kind of an interesting thing, right? So we've seen the dollar pull back, and that kind of popped gold. Now the dollar's kind of caught a sideways slight bid, and gold's pulling back. But one of the interesting things is just looking at this chart, this is the level we talked about a pullback on gold coming to right down here, right around this 1900-ish area before the next move higher. And again, I'm still in the camp that gold will have a significant breakout at some point, but I think that occurs like if you look at the data and the narrative being spun by CNBC and by so many political people, it's all that, inflation's going to go right back in the box. It's going to be sub 2%. This is going to be the perfect soft landing. And the case for gold is probably only made if it's not a soft landing. So you get fear, and also that inflation stays high. So at least for me, I mean, right now gold is behaving like that narrative where this is a triple top, right? So double top here, you get the big pullback, triple tops the small pullback, and then eventually it breaks to the upside. But again, I don't know if you have any interesting ideas on gold. The only other thing I'll mention on this is I've been following silver as well, and silver's been stronger than gold, right? So again, here's a lot of annotation on the chart that I just put in, but look at that move on silver. And again, so many people are like, oh my goodness, is this the next bull market in silver? Because I think for a lot of us, we remember back in this move, this was the most incredible move I've ever traded through in silver, where silver went from $11 to basically $30. And for a commodity like silver, that was insane, that type of move. Now, the kicker here, excuse me, that was not even the big move. I apologize. The one that I traded through during this period was even crazier, from $8 to $50. So the bigger question then is silver starting this bigger breakout? And what you can do is you can go to the gold silver ratio, right? So if we go to the gold silver ratio here, we can see that on the chart, look at this trend line here. We're right into that. So we're either at support or it's beginning to break. And again, that's going to be very interesting. Now, I'm in the camp that it's not going to break. And I'll tell you why. The basics of it is that silver's gotten a much bigger bid than gold recently because inflation looks like it's coming back in the box, and economic activity, which silver thrives off of because it's also industrial, it's an industrial metal, that's gotten a big bid. But as soon as we start to question the economics of the US and whether or not we will avoid recession, that's where silver starts to underperform gold. But it's an interesting trend line. I mean, really going back to 2021, look at that perfect little trend line there. So I don't know if you have any thoughts on this, Ben, but it's certainly the metals are getting interesting here.
I'd actually, before I get into my views, I'd actually like to ask you a question about it. Is a triple top, how often does that end up being a top? Like it's probably not doesn't it normally break to the upside rather than actually like finalizing as a triple top before going down?
Yeah. Triple tops. So the double tops are the most common ones for rejection. Triple tops are much less. Usually triple tops give that small pullback and then a big breakout occurs. And so that's kind of because probabilities are favoring that. That's how I'm looking at this scenario with gold. But again, there's always a chance, right? Everything has probability to it. There's always a chance it doesn't happen. But again, when you get the shallow pullback on the gold chart, it's telling you that there are a lot of buyers accumulating. And one thing I've heard is that, number one, the BRICS, we know the BRICS countries, they were looking to create a currency backed by gold. And we also know that central banks have been buying gold hand over fist, whether it's China or whether it's other countries. And so for me, it's always been, okay, do the charts support the big money? And if the charts support the big money, it's very rare that the charts will do the opposite of what the big money does, because big money controls things, right?
Yeah, I mean, I'm generally in agreement with your views on gold and silver. I think that, I mean, look, this big move over here that gold had in the 70s was during periods of high inflation. And I mean, even when we came out of the period of high inflation in the early 80s, gold was still going parabolic, right? I mean, it wasn't really until we got those final recessions that fully got inflation out of the system for the next, several decades, at least as high as it was, that gold finally pulled back. But, I will say that gold, to me, I mean, it seems like it spends periods where it's undervalued, right? Like in these periods, and also periods where it's grossly overvalued. And right now, it kind of seems like it's still near what you might call its fair value. But I would still think that in a period where we're just coming out of a decade of nothing but QE, where tech stocks have just outperformed most everything for a long time, I mean, it seems like there would be a natural rotation back into some of these commodities, and gold should do well. As far as the gold silver ratio, I've been looking at this for a long time. I'd be curious to know. So like in an environment where a recession forms, I guess the idea would be that gold outperforms silver. But I'd be curious, if maybe you get an example where the gold silver ratio initially goes up, But then maybe as you get later on into the decade, potentially coming out of a recession, maybe that silver starts to outperform gold again.
Yeah, yeah. I mean, it's definitely some interesting thought processes there in terms of that. I mean, the one thing I'm looking at here is that you have to also wonder, and this is bringing it kind of full circle back to crypto, is that does gold have the same sort of blow off ability where it just blasts higher with Bitcoin becoming more and more accepted? And I think one of the things that I've been hearing is more and more retail investors are starting to ask, um, financial people about Bitcoin specifically. And then again, the question is if you get that spot ETF and it becomes more accepted by the SEC, does gold still have that ability to make the big runs versus when Bitcoin's in the mix? And that's going to be interesting. It's going to be interesting to kind of look at how the progress goes forward.
I remember seeing this headline last week on Standard Chartered, predicting Bitcoin to 120K. I think within the next 12, 18 months or something. And I know I saw some people putting a lot of weight into that. I'm like, well, what were they predicting in the end of 2022? And they were calling for 5K, So it's like people are going to it's like once they're positioned for the outcome, right, then they might change their opinion on it. So you have to be careful reading some of those headlines. Because of course, if they've secured a position, and you could even think that if they put out a negative headline, or not just them in particular, but just anyone, if they put out a negative headline, maybe they're trying to buy into it. And if they put out a really positive headline, maybe they're trying to sell into it.
That's been my for a decade plus, is that I've noticed that when you get these crazy moves in stocks, and obviously a decade plus ago I was trading stocks and a little bit of commodities, is that you'll get all these analysts to upgrade right at the same time, and it usually marks a top. Now, there's two ways of thinking about it. One is they're creating the retail buyers to the institutions can unload into, and thus the top, or it's just getting anyone who was on the fence, since it's at an all-time high, it's getting the last few buyers in, and then there's just no more buyers left at that point. And so again, I don't have any proof one way or the other, but it certainly is. Like, for instance, I think Tesla and Nvidia got ridiculous upgrades again today. I've never seen a stock, except maybe for Apple back in the day when it was going nuts even more so, that has gotten more upgrades at these levels. And if you look at RSIs on a weekly Nvidia chart, I mean, if you look at it on even a Tesla chart, it is getting nuts. And just to flip over to my Tesla chart here, I just want to show you guys, but I'm keeping a very close eye because the hype over the weekend, by the way, there was so much pumping going on Tesla on Twitter this weekend too. And it kind of coexists with Friday being Options X. So there's a lot of $300 calls that have been bought. And the option side of this is that if these investors that paid very little for these $300 calls can push Tesla over 300, they get paid out huge amounts of money. And so they're really trying. But if you look at this is now potentially a doji, or if it sells off a little bit into the end of the day, you could have a topping tail here on Tesla, which is a very bearish candlestick formation. And the idea again behind this is that when you get all this pumping, it draws in these retail buyers. And then if price isn't holding up, it's telling you someone is selling into it. And again, that's where you get the term distribution, which is usually institutional money selling to retail, essentially creating bag holders, right? So again, just interesting little side notes here. One little interesting thing, I talked about this about a month ago, when Tesla unveiled their sales numbers, their deliveries. Over 50% of the sales were to China and to Chinese people. And I thought about this and I said, you know what, how is the US government not on top of this, right? So if you think about how much net worth is tied up of Elon Musk's in Tesla stock, it's about 33%. And then if he were to get pressured to change the algorithms in Twitter to favor China, there's so much potential national security risk there that, interestingly enough, finally, I think Warren today came out and said, hey, we need to look into this. And I'm like, all right, about time. I'm not a huge fan of hers, but I think it's the smart thing to do. If you think about how much control Twitter has over people's perceptions of things, it makes sense to me that you have to look into the pressure that China could apply to Elon to potentially have a little change in the algorithms of Twitter.
So as far as the overall index goes, I mean, we've seen Tesla do well recently. We've seen Nvidia do well.
Mhm.
I mean, even Meta is up what 3x off the lows, right? I mean,
Amazing.
a lot of these, and I know you were quite bullish on Meta back, I think when it was around $100 as well. So
Yeah.
I'm curious though, like, what's your view on the S&P? Because the chart I have right here is we talked about this before, right? Like the jaws have opened up, right? Like
Right.
on net liquidity and the S&P. How long do you think this goes on for? I mean, if you had to, does it go on for another 3 months, another 6 months, right? Like another 12 months? I mean, the history shows us that
Mhm.
the S&P at some point will likely close the jaws and go back to wherever the net liquidity is, right? Like where, in terms of money in the system, it'll go back to that point. Sometimes it takes 3 months, sometimes it takes a year. And so far, it's been about what, like 3 months or so
Right.
far. How long can we climb the wall of worry here, Gareth?
So the only things I could think of, right? So we can go back to 2019 to 2020 when it was flat and then the market was going up and then it had the big correction, right? And I think was that about a year. So it looks like your max historically is about a year, but
Right.
I don't know if you could do this. If you could measure from the market down to that line and just see if where the distance matches up with where
From
we are.
from this, sorry, from where the jaws opened up here in December 2018.
No, from the high point of the market, yep, yeah, right, going into COVID, right, to the down straight down to the yellow line.
That, I mean, just about 2 or 3 weeks.
Yeah.
Yeah, but I mean, over here in 28, the jaws also opened up here in 2018, in April, right around the same time.
Mhm.
Um, and here it took about 20 weeks for the market to top out, about 19 or 20 weeks. But then once the market did top out, it only took it what 2 to 3 months to come back down. The market, right? It takes the stairs up, but the the
Elevator.
elevator down, right? I mean,
Absolutely.
it gives people a false sense of security, right? Like it makes everyone feel comfortable. It's only ever going to go up, but when it moves down, it just moves down so quickly.
Is there a way to measure how big the jaws were in 2020, like from the high of the market down or is that would that down to the yellow line, just straight down? How big was that jaw distance? And then mapping it to how far we are with the jaws currently? I don't know if that's
Yeah, I mean, yeah.
relevant.
So I'll put in the net liquidity here on its own chart so that I can just easily measure this really quickly. So if we were to take, say, like a percent move, so this was from about April of 2018, and then we know the jaws clamped shut at the end of the year. So net liquidity dropped about 7% before the jaws really clamped shut.
Mm,
And then the next example, right? This is interesting because then the market rallied, but net liquidity didn't really go anywhere. I mean, it
right.
just, but so here though, here we can see that the jaws opened in April, and since then net liquidity is down about 4%. But no, but,
Interesting.
but at the recent low, it was down about 6%. But here's the thing, Gareth, because I mean, if you break up this chart into its constituents, right? Like if you look at the ECB, if you look at Japan, China, the UK, New Zealand, Australia. Not all of them, but most of them are reducing their balance sheet, right? Most of them have been reducing their balance sheet. Some of them aren't playing ball, but I mean, at least the United States is. We know the ECB is, and a few others in Canada. But the thing that I keep going back to is like, well, if the dollar goes down, net liquidity as measured in US dollars goes up, right? So either it's almost like it's fighting this battle of like, can the central banks reduce their balance sheets quicker than the dollar goes down? Because if they can't, the net liquidity is still up, it's still high, and then if as long as liquidity is still there, then assets can rally. So the Federal Reserve and central banks are playing a very difficult game. But that's one of the reasons why achieving soft landings are so hard to do, because it's so hard to know the sweet spot to stop rate hikes and
Right.
to stop QT, because by the time they finally stop QT, they've already probably gone too far, and
Right.
then it takes several rate hikes, like hundreds of basis points of rate hikes to give the economy any more life.
And I think it's important to recognize too that Jerome Powell has been very firm on saying that he wants to err on the side of getting inflation locked down versus repeating what happened to Volcker. Volcker stopped too soon and then inflation took off again. And so we know that if Jerome Powell had to choose, he would go further on hiking rates and be okay with a recession versus going too little and not and keeping inflation.
There's one other thing I'd point out is from the highs, net liquidity is down about 13 to 14%. already this cycle. There's also another way that I think we could measure liquidity as well, which is probably a more bullish way to look at it. And I believe it would be looking at, say, like adding up the money supply of some of the various sectors, right? So this is looking at the the local one, the Japan M2, in the Euro sector, and in China. And if you look at that, this is what it looks like. So if you look at that chart,
Mm.
and I'm not much for these TA patterns, but I'm be curious to see if it's going to break above these levels or if it's just going to top out here. I don't know.
It's fascinating because what we've been seeing is a market where the big, large, the trillion-dollar companies have been seeing well, not all the money flow, but again, there's no doubt about it that if you take out what they call the Magnificent Seven, the S&P 500 is slightly positive on the year versus up at having one of its best first halves that it has had in recent history. So
Right.
yeah, it's interesting to see. And again, you talked about Meta. I mean, Meta just incredible moves. Nvidia, incredible moves, all of these.
And here, by the way, the speaking of the money supply, this is the S&P divided by the M2. It's an interesting chart, right? It really, I keep going back to these charts, and I'm like, man, like sometimes it really feels like the only reason asset prices go up is just because we print a lot of money.
Yeah.
I mean, again, like look at the stock market in 1997. It was where it is today when you account for M2. So maybe this will be an interesting resistance level, because this is actually we're coming into the same level that topped us out in 2021 and the same level that topped us out in 2019. And how fascinating is it, Gareth, that the high pre-COVID, when you account for M2, was also the high in 2021, more or less.
Amazing. Yeah, and I think that is so fascinating because, people argue that, okay, well, COVID was a black swan event. No one knew it was going to happen. Yet if you looked at this chart, it all aligns some weird way. It aligns.
Well, look at this. Look at the area down here, like the like sort of this area, these lows here.
Yeah.
This low here in 2018, that's where this low came in back in October. And the pandemic drop is what took us well below those levels. So it's curious how this stuff, these, when you account for M2, just how easy the chart is to read. I mean, these rectangles here, this is spanning you from 2023 all the way back to 2018. You're talking about 5 years where the stock market hasn't really moved, and 25 years, when you look at it in the grand scheme of things.
That's amazing. And interesting, if you connect that high from 1999 down to, looks like that secondary, the third high there as well, there's a trend line that basically takes you to the COVID lows. Yeah.
Right. And there's also, I mean, you could also draw maybe these, if we break above this level, perhaps you look at this trend line, right, where it's just slowly going higher. But yeah, you're right. I mean, it's interesting how this stuff, are you talking about this one over here?
Yeah, that one there. Yeah.
Yeah. I'm also looking at this on a log scale. I don't know if looking at it on a regular scale might clean up the trend lines a little bit.
Just a little, but not much.
Yeah.
Super cool, man. So yeah, so I think to summarize, there's Bitcoin, we'll see if that dominance over the next couple of weeks does get down a little bit lower, but ultimately starts to trend higher. Wow, look at that.
I guess that's the trend line we're looking for.
That's the one. Amazing.
Hopefully we don't revisit that trend line.
Yeah. What's interesting is if you extend that trend line down, it almost gives you the double bottom from 07 to 09.
One thing that maybe we should touch on briefly before wrapping up is like real estate, because the real estate market, by the way, is what got us to these lows, right? It was the collapse of the real estate market. And I mean, I don't want to be the bearer of bad news, right? But I mean, the real estate market can't trend up forever. And definitely there's real estate cycles, just like there are cycles in crypto, just like there is in the stock market as well. And, at some point I have to imagine that we go into a period where inventory comes back on the market, whether it's caused by a recession or whether it's caused by the Fed going back to lower interest rates and people being willing to sell their houses. I don't know. But at some point I imagine that the wealth effect will take place with moves down in the real estate market.
Yeah. And we know how much, I mean, just one of the things we haven't touched on a whole lot, but is the commercial real estate situation, which is just, I mean, it's almost like the unspoken catastrophe going on right now. There's amazing amounts of office buildings in almost every city that are just totally empty. And there's many big companies that have just said, hey, we're not even going to pay our notes on these things. And so these banks are holding a massive, the only crazy thing is these banks don't have to mark to market, right? As long as they just keep it there, it's like it doesn't exist, but it does exist. And I think that is just it's kind of crazy how they can do that. But yeah.
It's also interesting too, speaking of bank, like if you look at the KRE, the regional banking ETF, ever since it put in this low here, Bitcoin has struggled, right, to really sustainably go higher. And when it was topping out here in January, that was really, I mean, this was back in January 2022. It came down, and then here before it entered into this leg lower, that's really what that was corresponded to the time that crypto had saw a pretty nice surge, right? Like if you were to just overlay Bitcoin USD onto this chart, I mean, you can see that as KRE, as a regional banking ETF, was going down, Bitcoin was going up. So, but it's interesting because this ETF has been going up, and then Bitcoin hasn't really continued its move. So it's almost like, if regional banks are collapsing, the bull case for Bitcoin is more obvious. If they're not collapsing, then people might think again. I do think that it's always worthwhile to remind people that long term, I think we're both very bullish.
Very bullish
Bitcoin. And I mean, I think the reason we talk about the Bitcoin dominance is because a lot of these things are just going to bleed back to Bitcoin, right? And Bitcoin, with the bull market to take us to new highs, Bitcoin leads it, right? It's not the altcoin market that leads that historically.
Well, and I think it would be an interesting hypothesis to think about. Well, we know Bitcoin came about in 2009, which was just when the banking crisis was finishing. But if we had a repeat of that, right, a repeat of what went on, how much money would go into Bitcoin? And I think that's if you want to see Bitcoin get to 100K fast, then that would be one way to do it. And you don't want to wish on that because obviously we know it hurt a lot of people. But that type of scenario again occurring, you would see. I mean, if we saw that just from a few smaller regional banks failing, imagine what would happen if we got into the big pickle.
Right. And I mean, perhaps we will in a year or two. I mean, I guess it depends on how far the Fed's willing to go. Right. We don't know.
Right.
But yeah, how far are they willing to hold? How firmly do they believe in higher for longer? Right. How firmly?
Yep. Cool, man. All right. I think that's a perfect spot to wrap it up for the week. Awesome. No Shill Zone, Ben. Thank you. Make sure, guys, follow Ben on his socials, Twitter, YouTube. I'm sure you're on other socials as well. Check out his service. I think it's well worth it, the data you provide. So, yeah, man.
And guys, make sure you guys check out Gareth as well. He's got a great YouTube channel, Into the Money Stocks as well. We're going to keep doing this on a weekly basis and try to just bring you guys as much interesting alpha as we can, right? Views on the market. And I guess, there'll be times I'm sure we're going to disagree on things. And I really think that'll actually be great, right? To talk about the different sides of it, because it's always good to get different perspectives on things, because we have to always be willing to be willing to change our mind on stuff when data proves it otherwise.
Yeah, absolutely. It's always the best when you get different points of view, and then the audience gets to make their determination on what they believe based on hearing both sides of the argument. So wonderful stuff, guys. Thank you all for tuning in, and we'll do this again next Monday, 11 a.m. every Monday. Take care, guys.
See you guys.